if the whole point of printing money and lowering interest rates is to make everything seem great, you're naturally going to get the opposite effect when rates go up, which we've been seeing here.
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you on Friday, May 18th for Arcadia's weekly market wrap-up. The bond market got slaughtered this week, and in today's video, we're going to dig into what is happening, what that is going to imply, and some of the other things that are going on around that. And really, if you're wondering, now that we're seeing interest rates rise, which has the potential of being a big shift in the markets, what to actually do. So all wrapped up in about 10 or 15 minutes today. So with that said, let us dig in. As you can see here, yield on the 10-year treasury actually came in a bit today, although if we take a look to the 1-month chart, you can see that basically earlier this week, finally, after sitting right below 3% for a while, finally went through and had a pretty big jump, made it up to 3.11%, which certainly is interesting. I had mentioned a couple weeks ago that, there's a lot of money that is positioned around that 3% mark, whether 3% actually, over or under that specific number really means that much of significance in the long term, perhaps not. But when you think about the fact that there are a lot of stop orders and a lot of trading action around that, was interesting to see how it did spike up significantly before coming back in today. Again, the simple way of putting this in perspective, if rates go up, that means the cost of borrowing money goes up. The discounted cash flows of a company would go down. Essentially all the things you saw when rates rose in 2005, 2006, which led to the collapsing of the bubbles that were in place then. Or actually, you know what, even simpler. If the whole point of printing money and lowering interest rates is to make everything seem great, you're naturally going to get the opposite effect when rates go up, which we've been seeing here. You've seen how the stock market has slowed down. I continue to see signs of the real estate market slowing down. And of course, if rates are going up, that means prices of bonds are going down. So while there have always been a lot of potential triggers to popping these stock, bond, and real estate bubbles, what's always really seemed perhaps the most apparent one that we could look towards would be rates going up. Rates continue to go up, at least in my opinion. I think the banking sector would collapse pretty quickly. I don't know how close we are to that point yet. We're still only at 3%, which again is very low, especially given all the things that are happening in the world, the amount of debt. It's when you have a government that goes out of its way almost seemingly to project the image that there is no fiscal plan and it's a ticking time bomb. So taking that default risk, let alone the inflation risk that your money's going to be worth less when you get it. So I wouldn't lend my money to the U.S. government for 10 years at 3%. And we will see, certainly with the Fed walking away from the balance sheet, raising interest rates, there's every reason to believe this trend will continue. And another reason to believe that trend will continue, here we have a report from Shift Gold. Chinese dumped billions in treasuries in March. Quick quote here: China, the largest foreign holder of U.S. treasuries, joined other countries in selling. They've been net buyers January and February. But also Japan, second largest holder, sold $8 billion. So if the Fed's walking away from the auction and the largest creditors are walking away from the auction and the Fed's raising rates, a lot of pressure on interest rates, certainly outside of manipulation or dark money pools, which are always a present factor. And God only really knows what goes on beneath the surface of these things, yet at least from what we can see visibly, you can see which way it's heading. Another story here, I believe I commented on last week, but Argentina running into a bit of a currency crisis, which I'll leave that up. So should you want to read more about that, you can. But keep in mind, like, all of these different derivatives and debt loads are all interconnected in the market. So it's possible that if Argentina continues to run into trouble, which, they certainly have a track record of doing with their currency, and from what I've read, it doesn't sound good, but, another potential spark, certainly if you have a currency melting down in one region of the globe, the banks get affected there. It has the possibility of spreading quickly. So whether this is a potential spark or trigger, we'll see. But perhaps more so, you just see how many of them there are out there. Plus, again, with the rising rates, it's really a matter of time before the Frogger gets knocked out by a car here. Story on silver doctors, another nail in the coffin. EU to ditch US dollar. According to this report, they're going to start switching payments to euro for its oil purchases for Iran. So another customer saying we don't need dollars anymore. You see where this is headed. Speaking of gold, here we have an interesting one. Mining Exec, we found all the gold. This is Ian Telfer, chairman of Goldcore, basically saying that most of the gold has been found. If I could give one sentence about the gold mining business, it's that in my life, gold produced from mines has gone up pretty steadily for 40 years. Well, either this year it starts to go down, or next year it starts to go down, or it's already going down. We're right at peak gold, which isn't necessarily saying that there's not more gold out there, but just that at these prices, it's not economic to get it, which is another factor supporting why prices will rise, aside from the fact that the bankers write a ton of paper gold and silver that I don't believe they can physically deliver. And here's his quote: at 1,300 per ounce, we found it all. I don't think there are any more mines out there, nothing significant, and the exploration records indicate that. Which, again, there are folks out there who can speak more intelligently to the minutia of the mining industry. Certainly check out Dave Kranzler or Rick Rule of Sprott Global if you want to dig in any further on the mining industry. But this matches what I've been reading, studying, and seeing. And then, of course, another gold story here. Gold has replaced the dollar as the local currency of choice for Iranians. Interesting picture here. Again, I know there's a lot of stuff on the internet, so I don't like to read too much into any one report, but certainly if this is accurate as being reported, again, showing, for all the stuff that Wall Street and banks say, or even the stuff that I say or other people on YouTube or elsewhere, I like the value of empirical evidence where we see things that are already happening. At least if you look at Venezuela, where there's already a currency crisis, or in Argentina, where these things that I expect to happen in the US and Europe to occur, maybe they'll play out differently. But again, you see, here's a nation turning to gold. We've heard the reports of the Venezuelans using cryptocurrency, and I think there's value in that. There's what we think, and then there's the way life actually unfolds. So certainly a lot of reasons, in my opinion, to like owning gold and silver, certainly as opposed to treasuries and dollars. The simplest of which, if you look at supply and demand, when they're pumping out tons of one and they're not finding as much of the other, I continue to love trading dollars for metal at this point, specifically, or at least in part, because metals are basically at the cost it takes to get them out of the ground. Talked a lot about how the markets are manipulated, with, in this case, prices being a lot lower than makes any logical sense, or I think would be priced in a free market. So certainly the levels on gold and silver still really good. Silver $16.50. Let's see where gold is trading today. Actually went below 1,300. I believe that was earlier this week. So right under that level. So certainly in my opinion, good levels if you are interested in buying. And then the cryptos down a little bit this week. Not so much happening. My beloved Litecoin getting pummeled a bit. Bitcoin down at 81.20, Litecoin at 132.80. So certainly again, if you're holding the cryptos and you've lost some paper value, at least at the moment, remember it's still a crypto until you've sold it. So certainly if you're holding them, you're down a little bit, but if you're wondering, is this still a good time to buy? Well, I'll share my opinion, which is not legal financial advice, but I think so. And again, the simplest way I look at it is that to me, it's clear that the dollar system as it exists now is on borrowed time. I mean, you've gone through that enough. And if you believe that the technology and the cryptos is legitimate, with by all means, if you look through this list of the 100 top cryptos, I'm guessing more than half of them probably aren't great investments. So you want to be very careful. Yet if you believe, as I do, that we live in a digital world, as much as gold and silver is going to play a role, that still, if you want to buy something online, you can't, or I guess you could, but if you, what are you going to chip off a little shaving of the gold or silver? Whereas we live in a digital world, cryptos are embracing that. So I believe there will be a combination of the two. Although in either case, the simplest way, if the cryptos are valid as I understand them and believe them to be, and they're going to be used, and you have a currency system that needs to be replaced, the prices will necessarily have to go up, and go up by a lot. So I'm still sitting there holding what I own, and would love to buy more at these levels. So anyway, that's my take on it. I'd love to know what you think. Leave your questions below, of course, after you hit the subscribe button. And with that said, hope I think we're getting into summer, so hope it's off to a good start. Go out, do something wonderful, enjoy this weekend. Thank you as always for watching, and I will see you again next week.